and welcome to the NC podcast. My name is Natasha Collins and I am the founder of NC Real Estate, which includes its members club for landlords and property investors to come and build profitable property portfolios that align with their goals. If you haven't done this already, please head on over to ncrealestate.co.uk/flowchart, where you can download my property investment expansion success formula. It's a one side of A4 paper. You print it off, please hang it on your wall and use that as your roadmap for investing in property. If you haven't got it, again, I'm going to harp on about it until I have every single property investor downloading it and having it on their wall. That's ncrealestate.co.uk/flowchart. Okay, let's get on to today because I am very excited. And this is a subject that I'm asked a lot about, but I haven't really covered it in that much detail. So I'm hoping that my guest today, Johnathan Gordon from Clan Gordon in Edinburgh, will help me with this. We're going to be discussing the Scottish property market. Hi, Johnathan.
Oh, hi.
How are you doing?
I'm okay. How are you?
Yeah, very good. Thank you. Thank you for coming and joining me today.
Oh, you're welcome. Welcome. Looking forward to it.
So we're going to be talking about Scotland, and we'll start off with the differences between England and Scotland, because one of the biggest mistakes that investors make is that what goes on in England happens in Scotland, right? It's not the same, is it?
It's not the same. I mean, I don't have a huge experience of stuff in England. I lived in London for a wee while and rented properties, but I don't know. I've had a bit of research just to compare so that I can advise clients from England, primarily from London, who are looking to Scotland, but I don't have any direct experience of working in that market. But yeah, done all the research to see the differences. Yeah, I guess.
So let's start off by talking about the Edinburgh market. That's where you work. Tell me what's going on. How should we be feeling? Optimistic?
It's difficult to say, really. Edinburgh is really, really small in compared to anything. So Glasgow, on the other side of the country, is much bigger, and it's much more like somewhere in England, like Manchester, Birmingham, London. It's nowhere near as big as London, obviously, but it's similar in that there's just so many different areas. Yeah. So there's Edinburgh's just much smaller. It's geographically bounded by a few things, so the sea on one side and the hills on another, and so first-time buyers, young people trying to buy, unless they're getting help from their parents, it really has the property prices have really outstripped what people can typically afford in what I would say is like a normal job. So there's a real problem for first-time buyers trying to compete with people whose parents have money. So I guess one of the easiest ways to point out that gap is 25% of children in Edinburgh is quite a well-known thing up here. That's very high compared to anywhere else, potentially in the UK, that go to private school. Okay. And so that's an indicator of the kind of inequalities between different parts of Edinburgh within this small area. So when people are able to fund their children to buy their properties, that helps the prices to rise perhaps even faster than some other areas.
So do you feel like the market is growing quite quickly, or is it flattened out? And how are we looking in comparable to the sold prices versus rental prices?
So I've always thought that rental prices are growing quite fast in Edinburgh. Over the last few years, it's 4.8% over the last 12 months. And I always thought it was kind of, the yield was similar, so the yield would stay roughly the same over the kind of 10, 11 years that I've been doing this full time in Edinburgh, but it's actually quite a big difference. So that rents have actually grown over that time faster, and the biggest reason for this is that in 2008, with the big financial crash, property prices really took a hit. So £220,000 two-bed new build properties that people were buying, really quickly, buying them off plan in 2006-07. They were, after 2008-09, they couldn't sell them, but they would only be worth maybe 150,000. So there's huge drops in that, and it's only really now that those new build properties have recovered to kind of where they are. And new builds, if you stick with that, it's still quite flat. I mean, they've very gradually over the 10, 12 years since then have gone up in price, but it's still fairly flat. People aren't offering huge amounts over the valuation prices, so it's a much slower growth in the purchases and then the values that track with that when the surveyors are valuing them. Whereas traditional property took a similar hit, but recovered, and they were flat as well for maybe 4 years, I guess, from 2008 to 2012, 13. But then they started a bit of a gradual uplift, but then really fast over the last 2 years.
And why do you think
so
that is?
They've gone back to much higher prices than they were in 2006, 2007, whereas new build properties or newer build properties have kind of just got back to where they were.
Why do you think that is?
I think the new build properties, people like to buy new build properties, so that makes that a different market. Because of the size of Edinburgh and it's quite a unique in Scotland to have all these flatted tenements, and so you can't really build any more of them. Whereas I think if you're in various towns in England, you can correct me if I'm wrong, but you'll have these rows of terraced houses, and they might be split into upper and lower villas. And I think you can recreate that. I think they do, from what I see, recreate that to some extent, as well as building more flats. They do recreate some of those houses, whereas in Edinburgh, there are no more of these tenements, and there's no space in the city centre to build them. So the people are really heavily competing for those, and that's on the nicest streets and the best areas where people want to live. And the new build properties tend to be on the outlying bits, so they'll be on the edge of a good area and into the sort of more commercial areas in Leith. So they're not as well developed as places to live.
Okay. And so have you seen that investors are buying up those types of properties as well? Do they make good rental investments?
So if you want to get a straight cash return, it's much easier to buy new build properties, and then your factor will look after the repairs, whereas with the traditional tenements, it kind of depends on what your neighbours are hoping to do, because you have to get agreement to do any repairs on the tenement buildings. But across both of those areas, which I see as different, new build and traditional, most of our first 100 properties that we managed in our first or took on in our first couple of years were people that couldn't sell their properties, but they matched the type of landlord traditionally over the last 20, 30 years, which is people that have owned a flat, they've found a partner, moved in with them into the bigger flat and rented the other one out because they can afford to keep it. Or they've both had a flat, sold them both when they have children, and bought a house and then kept them both and rented them out. That's your traditional Edinburgh landlords. And what we found is that the new stamp duty, which is what it's called in England, it's called Land and Building Transaction Tax up here, there's quite a heavy hit on your initial tax when you purchase a property, which has put some of those people off. So if you want to hold on to your £200,000 flat, say, you'll pay, and you want to buy a house and then you're going to rent out the flat, you'll actually pay this additional home stamp duty on your house. So if you buy a £500,000 house because you've done well and you've got two people earning that are putting into the new property, you'll actually pay this additional home rate tax the first time you do that on your house. Which is quite a big sting. So we've found a real drop-off in the number of people that can afford to do that. And actually more investors who are cash-rich coming into the market, sometimes from outside of Scotland, but also still in Edinburgh, who just have surplus cash looking to buy properties. So a bit more of the actual buying to let rather than holding on to your property and renting it out when you move out of it.
Okay. So it's almost like a new wave of landlord.
I think it is. I think there's just it's probably just back to that. You know, the parents of the first time buyers, they've either got the money that they from their equity that they can give to their children, or they're actually able to invest for themselves. You know, so I think there is a lot of wealth in the UK that has been squeezed into the I don't know what generation that would be called, but probably from my age upwards. I mean, I was unlucky. I bought a property in Perth around about the time when properties were doubling in Edinburgh in value, and my property didn't really go up very much, so I missed out on a chunk there. But there's a lot of people whose properties in Edinburgh, they really did double over just a few years, less than 5 years. Their property could double in price in, I think, the 90s, maybe 2000, early 2000s. So they would jump from 50,000 to 100,000. And so the people that were involved in that property ladder, and then they've now got children and grown-up children, and they might even be heading towards retirement, you know, they've got cash. And then obviously people who are in other areas where it's just perhaps becoming a bit more common for people to invest outside of their local area than it would have been 20 years ago. People are a bit braver or looking for better opportunities, and it feels easier to buy somewhere else.
Mm-hmm. So do you think there's still a strong investment market? So if you wanted to buy buy-to-lets, would Edinburgh still be a place to buy?
Yes, it is. The difficulty is being brave in what you're going to do. So a typical buy-to-let flat in Leith. So Leith is the area of Edinburgh that's really transforming at the moment. So at the top of Leith Walk is the east end of the centre of Edinburgh. So that's where John Lewis is.
Yep.
And the building that John Lewis in St James Centre is going to undergo a massive redevelopment. It's one of the biggest developments. You know, if you're in London and you see cranes everywhere around every corner, this is the one bit in Edinburgh where it matches that. You've got about 7 cranes, about as big as you can get in that one area, working all the time just now. So that's a massive redevelopment because at the other end of Leith Walk, down at the bottom, is that leads into where the docks are and all the old commercial bond buildings where they had stored whiskey, grain, came in on ships or went out on ships, and it's where all the scrap yards are and things as well. So that's the bottom of Leith Walk. So this big long road that connects those two areas. So the very top, which is going to be, you know, that development in St James Centre will be, you know, 600,000, 700,000, 800,000 pound 2-bedroom flats, more like kind of London prices.
Yeah.
And at the bottom of that Leith Walk, or the bottom half of it, you can buy 1-bedroom flats for 125, 2-bedroom flats for 190, 200,000.
Okay.
And it's very kind of, I guess it's lower risk than what you have to spend on a property in London. So you can spend that, and if you only get £700 a month instead of £800 you thought you'd get, it's not such a big hit as if you do the same differential in a more expensive city. So Edinburgh's becoming expensive, but you know, when you look at those numbers, it's something that a lot of investors would see much lower than other cities that you can invest in, I would think. And the rental returns that you get, so the market is growing, and Edinburgh is a very you know, it's full employment, or as close as you can get to that, and it's very good jobs out in Edinburgh. So the easiest place to live and in terms of accessing all those good jobs in the centre of Edinburgh is in Leith. So it's like you can walk up Leith Walk in 20 minutes from these cheaper flats up to the city centre. The tram that goes from the airport into the centre of town, that is now going to be extended straight down Leith Walk.
Oh, wow.
And go right down to the docks. So and at the bottom of Leith Walk, which I think I was about to say before, at the other end from the big development in St James Centre where John Lewis is, you're going to have, as a company called Drum Property, that are going to knock down one whole section at the bottom of Leith Walk. It's very controversial, but building development, and it is going to be one of the biggest developments in Edinburgh in terms of residential and commercial change that there's been for a while. And so if you're looking to invest in that area just now, you can see that as a good opportunity to buy those, because that whole area is going to come up. So all the shops that are, you know, little cafes that are not doing very well, or bookmaker shops, they're going to change into nicer cafes, nicer restaurants. And strange quirk in Edinburgh is that the Michelin-starred restaurants are already in that area.
Oh. Even
though it's one of the sort of poorer areas traditionally. They happen to be the kitchen, like Tom Kitchen's kitchen is there. Martin Wishart has one of his places down there. And there's one other I can't remember the name of. So it's a really kind of, I don't know if the right word for my age is to say hip and happening kind of place.
Yep.
But it's a pretty cool place to hang out.
Okay.
So it's very popular with rentals, and as I said, the rentals I think have grown fast, and perhaps a little bit faster even than the property prices over the last 10 years.